Hey everybody, it's when I come back at you on another video. So with this video, I wanted to do a trade recap for today, Tuesday, April 15th. Now this was definitely one of the more challenging days, and now because it was more challenging because this was more of an ambiguous day, right? Like this is one of these days where there wasn't necessarily a clear-cut bias. I was kind of like neutral because I could have made the case for either direction, but the direction I settled with ended up being the correct bias, and it resulted in me winning for the day. So I wanted to do the breakdown for you guys here. So jumping right in for earlier today, we had April 15th on Tuesday, right? We had no news. Um, so there's nothing for us to be worried about, and the rest of the week looks pretty normal. So we're pretty much going to be trading for the rest of the week as well. But this is the trade recap for today. So jumping in right here on the daily time frame, it's hard to tell which direction price wants to go because initially, right, I was bearish because price made an aggressive move down, but price also cleared liquidity here and here and here, right? So it's very well possible that price could have came down, cleared liquidity, and then reversed to go higher. And as you can see, right, you have fair value gaps here and gaps here that like got blasted right through. So it's easy to make the case that even though there wasn't no structure that was taken, right, it's easy to make the case that price is now bullish. But because it's once again ambiguous on the daily, that's when I'm dropping to the other higher time frames of the 4 hour and the 1 hour, right? I essentially want to try to paint a picture of the direction that price most likely wants to go. And ideally, if you could find a clear bias on the daily, then stick with that. But if you can't, then you can drop down to the 4 hour time frame and see if you get any additional information or clues in price of which direction you may think price wants to head towards. So here we are on the 4 hour time frame, and now I'll unhide my drawings, right? So the first clue that led me towards having more of a bearish bias over bullish is first and foremost the new week opening gap. So this is the gap here from Friday to Sunday's open. You can see price gap literally gapped up, right? So I highlighted this gap. So this essentially serves as a fair value gap. So the way I saw it is this: new week opening gap serves as a fair value gap. So if price were to be bullish, then price would effectively respect this gap, right? It can tap into it, but it will respect it and then continue pushing higher to clear out these highs. And the reason why is because these highs are equal highs. So it's a pool of liquidity up here. So this is what I was anticipating. But as you can see with yesterday's trading day, right, on Monday, um, I was bullish on price. Let me drop down to 15-minute time frame. Right, yesterday's trading day, I was bullish on price. Why? Because of the new week opening gap, which right here, the big gap. I thought that price would go down, tap into it, and push higher. Why? Because it's a massive gap and price is sensitive to those areas. Now, instead of respecting the gap, price did the exact opposite and blasted right through. So on this trading day, I was bullish. I wanted to take price higher. Price didn't really. It technically gave me my like entry and everything, whatever. But for the 5 minute time frames, you guys know I wait for like an aggressive 5 minute candle to go in the direction I'm looking to take it, which in this case bullish. I didn't see that, which is why I didn't take a trade. And if I were to take the opportunity that presented itself, price made sort of, a push up halfway through. I was having this high be the final target. As you can see, price never came up to target, but instead it just continued going bearish and blasted through the new week opening gap. And we've seen this aggressive bearish movement. So now, after this push down, right, this is the last push from this high to this low. This is the last leg of price that we got to see. Now, what you also see is price respecting this fair value gap. So what you guys need to remember is that price has its tendencies. When price is going either bearish or bullish, right? Like whether up or down, price has a tendency to do certain things, right? In this case, when price is bearish, it has a tendency to respect bearish fair value gaps, and it has a tendency to disrespect bullish for value gaps, right? So in this case, the bearish for value gap, you see price is respecting it. Now for this for value gap right here, you see price disrespects it because it trades right through it. and right past it, like it didn't exist. So going to the 9 o'clock session the morning session of today, I usually like to let price unfold at least until 9 o'clock before I start doing my markings, right? So in that case, because it helps me mark out my swing highs or swing lows depending on the bias that I have for the day. Um, So because I'm seeing price from yesterday, price just kept going lower and it didn't really show a sign of breaking structure higher or anything, right? This gave me my bearish bias. I anticipated price to want to clear some of these highs, maybe clear this high up here and maybe remain in this fair value gap before pushing lower. So when I enter a trading day with a bias, I stick with that bias for the trading day, right? I don't just change my bias midway through and just keep flip flopping. It's just once I have the bias, that's what I'm sticking with. And then either trade is gonna present me with the opportunity in that direction, or it's not. It's just that simple. So this is why I was leaning towards being bearish because the new week opening gap got traded through, as you can see here. Price traded through that level, which was a huge sign that price didn't want to go higher, right? Because if you see on the 15-minute time frame, these are pretty much equal highs right here. So I thought if the new week opening gap held, it would want to go up to last week's high and take it. But instead, price did the opposite and broke down lower. So I just stuck with that bias to say, okay, right now price is trending lower, even on like the 1 hour, the 4 hour. It seems like that's where it wants to go. So that's where I'm planning to take price. So I was bearish on the day because of that. So now that I explained that to you guys, here we have 830, and now we look to the left of 830. We want to mark the most recent swing high that will serve as our buy side liquidity, which clear as day it is right here because this candle is a swing. And now, of course, we have our bearish targets, right? Because if we're expecting price to be bearish, we expect price to go lower. And if we expect price to go lower, we expect this low to get cleared, eventually this low to get cleared, and these lows to get cleared, right? Ideally, you want to eventually see yesterday's low get cleared. Now, it's not guaranteed to happen, right? It may not happen on this trading day. It could take another day, or it could be the day after, or 2 days later, whatever it is. But if we're expecting price to be bearish, then we want to eventually see these lows all get cleared. So this is the scenario that I'm looking at. This right now is the idea that I'm seeing. And then of course, right, if we're bearish on price, we want to also mark out other gaps which can serve as our take profit targets. But I'm going to highlight to you guys is I've made an adjustment to my trading. Previously, I would take partials along the way and try to reach final target, but because I'm still trading a small account and I want to eliminate greed, I'm now taking a trade from wherever it is that I enter to a 1.5 risk reward. I'm taking it to full target and that's it. The, if I have to move my stop loss to break even, I'll follow my rules to move my stop loss to break even. But aside from that, I'm just taking final target at 1.5 risk reward to eliminate greed, right? So even though we have targets here and here and here, right? These are all potential targets. Now, of course, you have, you know, other lows, right? Like you got lows right here, you have lows here, right? These are the main targets that essentially stand out, at least in my eyes, right? So we have a lot of downward targets, right? So this is all shaping up to be a bearish setup of a day. So now if we keep fast forwarding it, right, we're gonna fast forward it quite some time. So perfect. Let me just fix things now. Perfect. So this candle right here, this is the 930 open. So as you can see, price is bullish on 930 open. Now prior to 930, price came up and cleared the buy side liquidity. So I'll mark it with the eyeball right here. Price came and cleared some liquidity, and then after 930, we're seeing that it made a new high. And what did this candle push through? It cleared the highs here, highs here, highs here, which is all good signs, right? Because we want to see price push up. Oftentimes when you're trading indices, right, it's very common for after the 930 open or even when price starts taking liquidity, but generally after 930 open, you want to see the fake rally. We want to see the fake rally opposite to our bias, right? Opposite to the direction of where we want to take price, which is exactly what I want to see here, right? If I'm bearish on price, I want to see price go up. I want to see this aggressive bullish movement. Why? Because I want to see buy side liquidity get activated, right? All these traders who are breakout traders who, have uh buy stops up here, which basically signals that once price trips them in to take price higher because they're expecting price to continue going higher, right? That is buy side being activated. And when price moves like this, it is also taking out the early sellers, right? Anyone who sold here with a stop loss above this level, anyone who sold here with their stop loss above this level, right? Price is taking out all of the traders, was activating the orders for the traders who think price is going to go higher and tripping out the traders who sold early with their stop losses above these levels up here. That is effectively what price is doing. So now with price come up and clearing these highs, right, is making higher highs. I want to eventually see, and right, price is also pushing into our fair value gap. And I'll also mark out this high right here because as you can see, price is getting much closer to. We don't need to have this like imbalance all the way out, but the blue ray right here, this is the previous high as well, right? So I see price moving up aggressively, so I wanted to mark that as well. And boom, you see price comes up and it clears that high as well. So that's another good sign to want to take price lower because one of the tendencies of price when it's bearish, not only does it have a tendency to respect bearish fair value gap, but it also has a tendency to clear old highs, right? It likes to go after old highs to activate the buy stops, to activate the buying orders, so then price can place its sell orders above the old highs, right? So once I seen the high get taken, I was, happy about that. Now it's effectively what I'm waiting for. I'm waiting for some sort of aggressive candle lower, which we do see right here. So once we get this aggressive bearish candle, now I'm dropping into lower time frames to see if I see a break of structure and a fair value gap entry. So nothing on the 5 minute, 4 minute time frames, nothing there, right? We see this is the most recent swing low. Price clearly has not cleared the level yet, so there's nothing to do here. 3 minute time frame, this is the most recent swing low prior to the high that was formed. No structure break yet. 2 minute time frame, this was the most recent high. Most recent low prior to the high is down here, right? So still nothing, right? So you're seeing it, still nothing. Now, some of you probably seen this and say, hey, Joel, this high was made here. This low got taken out and it got cleared by these candles right here. Now, something else that is important about my strategy. First and foremost, there is obviously no fair value gap, right? If I were to highlight the displacement low, the displacement high right here, there is no open fair value gap. So there's nothing to trade anyways. But my rule of thumb, like one of my requirements prior to me entering a trade is I need to see price break structure in at least two time frames. So from the 5 minute down to the 1 minute, I need to see structure break happen on multiple time frames because I've seen it too many times, like in this example, where price, you know, breaks structure on the 1 minute time frame, but no other time frame. Right? On the 2 minute time frame, the last structure point is down here. So I can't put all my emphasis on that 1 minute time frame if I'm not seeing a structure break on any other time frame, right? 2 minute, 3 minute, 4 minute, 5 minute, we just went through. There's no other structure breaks anywhere else. So because of that, I ignore it, right? There's no trade for you to take anyways because there's no fair value gap anyway. So there's no entry to begin with. But even if there was a fair value gap that was left there, I'm not going to trade it because there hasn't been a structure break on any other time frame yet. And that's something that I learned through experience, guys. This is why experience is so important because me making all these mistakes is what led me to be in this position where I now know how to avoid taking losses, avoid taking unnecessary losses. Because one way to become a profitable trader is by avoiding losses, is by minimizing your losses. Because then, if you can minimize your losses and maximize your win rate, then compounding will take effect, right? And your account will grow exponentially because you're only waiting, right? Now, of course, you won't have a 100% win rate. That's not possible. I'm not saying that that's what I have or that the normal. That's what's possible. You will take losses, it's inevitable, but you can expedite your progress as a trader by eliminating losses and learning from your mistakes. And that's one thing that I picked up on where there was so many trades I took because I saw a 1 minute break of structure, but there was no structure break on any other time frame, and it led to me taking a loss. Avoid these losses, right? So after that, you see the next candle, bullish. So I'll just jump into the time frames quickly, but I know because there was a bearish candle here, this is the most recent swing low that needs to get cleared across the 2 minutes to the 5 minute time frame. Price clearly did not get under there yet, and now we see a bullish candle. There's gonna be nothing to trade, but I'll still show you guys in the lower time frames, right? As you see, price there's no gaps, there's no structure breaks, there's no gaps, so there's nothing to trade. There's nothing to trade. Next 5 minute candle, right? Still bullish. Next 5 minute candle, bullish. So see, this is what I'm talking about. So let's just say, for example, there was no gap on the 1 minute time frame, but say there was a gap and you took a sell, you would have taken a loss, right? Because price just blasted right through. Price did not respect it because price was not ready to go lower. So you can see here, this is a massive wick. I'm not interested in massive wicks. I want to see bodies. I want to see like this candle right here. This is what I want to see. I want to see aggressive movement lower. So when I see long wicks like this with barely any body, I'm not interested in taking the trade. I want to see aggressive movement, right? You can see there's still no structure breaks. 3 minute time frame, the low's here. 2 minute time frame, the low is here, so there's still nothing yet. 1 minute time frame, you can see on 1 minute time frame, price came down and cleared this low, but this is the only structure break, and it only happened on the 1 minute time frame so far. So I'm not gonna, I still don't do anything. Then you see this move down here, right? This aggressive move down. This is what I'm talking about. This is what you want to wait for, right? Because when you see movement like this is what's signaling to you, hey, you know, I most likely, this is price talking right there. I, as price, most likely want to move lower when you see something like this, because now what have you seen? You've seen one of yesterday's swing highs get cleared, right, with this push up. Then what happens? Price retraces, price comes up, clears this high, right? The high that just got formed, it got cleared again. And then after the high got cleared, you see that now price wants to move lower. So this is what I mean. This is why you need to practice patience as a trader. This is why you need to gain experience as a trader, and you only gain experience by going through the motion, by doing this, right? Because as you do this on your own, you'll begin learning from your mistakes, but then you'll become an independently thinking and operating trader, and that's what you want to do, right? You want to get to the point where you can create these setups and take these trades on your own without needing to depend on anyone else, because there's so many people who just want to take, signals and alerts from other people, but it's like, why would you ever want to be able to depend, like, why would you want to ever need to depend on anybody else or need to depend on indicators? Why not learn the skill sets so then you can learn how to do this on your own? So then I don't need to hold your hand or do anything, right? Of course, I don't mind teaching you guys, right? That's okay. But it's just you want to get to a point where you become an independently thinking trader, where this is happening in real time and you're making decisions in real time, right? And you're calling it, right? You're going through the motion. So this aggressive candle is what I want to see. Now, perfect world, of course, I don't necessarily want to see an aggressive push that low, right? Like I want to see like some targets be left, but still we have lower targets, right? We still have this fair value gap here. We have the low of the day and the low of yesterday and all that good stuff. So even though this was a very aggressive push down, I was still okay with taking an entry because there's still a lot of movement that's left. So now we drop to lower time frames to see if a fair value gap was left, right? So 4 minute time frame, this was the break of structure, um, and so aggressive move lower. So right now we don't have a fair value gap, and if we did, the fair value gap would need to be from this low to this high, and clearly we don't see anything, right? 3 minute time frame, this is a good sign, right? So as you can see, 5 minute time frame structure, we broke structure here. 4 minute time frame, we broke structure again. 3 minute time frame, we broke structure here again. So now our confirmations are met, right? We have the displacement low, displacement high. Mark that out in time, and I'll make it pink for you guys. Do we see a fair value gap within the displacement range? Yes, we do, right? We see a gap right here. Now, of course, this isn't a monstrous fair value gap, right? However, this is a rather obvious fair value gap. Now, rule of thumb is the bigger the fair value gap, the better, right? Because then it's more likely that price will actually hold the fair value gap, right? Because if it's bigger, it has more weight to it. It's a much greater emphasis. This fair value gap is not the biggest in the world, but it is still big enough where it is noticeable, right? You're not just going to like not see it. Like it's you're gonna see it, right? And if you guys want homework, this same setup also appeared for the S&P as well. The same exact time, price broke structure at the same minute, and then price came up to tap into this entry at the same exact minute. So this is what I mean. The markets are absolutely 100%, 1000% rigged. None of this happens by accident. It's not the bulls and the bears. There's no way in God's green earth that the bulls and bears are all grabbing liquidity, breaking structure, and tapping into these fair value gaps and also hitting the targets all at the same exact time. That's not it's not possible for it to be random, for it to be just bulls and bears fighting for. It's all rigged, it's all manipulated 100%, right? So that's your homework. You can go look at the S&P to see this exact setup also play out. But the reason why I took a trade on the NAS100 is because this fair value gap here was bigger and more noticeable on the NAS100 than it was on the S&P. So I felt more comfortable taking the trade on the NAS100 than the S&P. But pretty much everything else was identical between the two pairs. So we're looking at it here on the 3 minute time frame. Now, of course, you can check the lower time frames. 2 minute time frame, you're seeing the same exact setup, except the break of structure on the 2 minute time frame is this low right here. Now, of course, it's from the displacement low to the displacement high. We still see the fair value gap fit within this range, so it's still perfectly fine. And the fair value gap is formed by the three black candles, which everything is being met. 1 minute time frame, you see a bigger fair value gap, but it really doesn't matter because the entry on the 2 minute, 3 minute fair value gap is still at the very beginning of the 1 minute. So if you wanted to, you could highlight the 1 minute fair value gap and take it there. It'll still be the same exact entry, so it doesn't matter. But for me, I like to leave the time frame on the time frame that I'm planning to take the entry on, which is a 3 minute. So essentially, I had a sell limit right here as a short. I put my stop loss above the high, so it's 806 pips or 880 pips, I guess, whatever you want to call it, right? It's just 806. So here I calculate my risk. I punch it into a calculator. It gives me my lot size. And so now I have my position in place, right? And just for context, I have a small account, so I literally traded a zero point zero 0.01. So that's that. But yes, I calculated my risk, and so that was the position. Now, previously, I used to, try to take partials along the way, right? Like have my final target be all the way at the actual final target, which would be yesterday's low, and then I'll take partials along the way, right? Like I would take partials, like for example, whatever low gets formed here, this would be a target. Then you got the fair value gap, then this low, then this low, then this low, right? So these will all be targets, and that is a perfectly okay way to trade. However, because of, I guess you can say, greed or instances where trades should have resulted in wins but didn't, or like I only took a little bit of partial because I was kind of being greedy, and so I only took a small partial and I let a winner not be a winner, or other instances where uh price pretty much I just took a break even trade because price didn't hit my target, my first main target, and it led to my account basically sort of remaining around like closer to a standstill. I've adopted a new rule, and that new rule is that I'm going to take a trade to a one to 1.5 risk to reward. So this is what I'm looking at. So I'm no longer going through the motions of taking partial and all that stuff. I'm going to take the trade right at this entry. I set my sell limit right here, and my final target is at this level at 1 to 1.5 risk reward. Now, if there's ever a trade where the final target is less than a 1.5, then I'll just take it to final target. If the final target is a 1.2, I'll just take it at 1.2. I'm not going to get greedy, right? This, me taking it to 1.5 risk reward, that is absolutely achievable target. That is absolutely low hanging fruit because trust me, guys, I've been trading this pair for months and several years at this point. So I've seen a lot of deliveries. I've seen price unfold over and over and over. And there's so many times where I would have a 1 to 2 as a target, or like a little bit over 1 to 2, right? Like these legit targets, and price would just miss it. and then I'll walk away with nothing. So because I am very particular with taking trades, I don't take many trades. I'm more comfortable risking a greater percentage per trade. And because now I have this very achievable target, low hanging fruit, which this target that I know can be hit time and time again, it will essentially allow me to have a lot more winners, right? And minimize the days where I only take a small partial and get nothing, or and like get sent to break even, or those days where I'm just being greedy, trying to take everything, and then I walk away with nothing, or like this will help avoid that. So it's going to be 1 to 1.5 risk reward. That is the trade I'm looking at, right? But what I'll do here, I'll also, since I know there's going to be some people who like to take like kind of like them swing trades, I'll also have the final target here for you guys. The final target will be a 1 to 4, but I would never take it all the way down. Excuse me. I would never take it all the way down, like as a full target. Actually, no, I'll just get rid of that. Whatever. We'll just leave it like this. So this is what I was looking at for the trade. Now we wait, right? So basically, I have this in place. Now I want to make sure that this trade activates prior to 11 o'clock, because if it doesn't activate before 11 o'clock, then I'm done trading. So as you can see here, price. Now, what would have invalidated this trade for me, what would have invalidated is if this low got cleared, because price made this aggressive move down, and if this low got cleared, then that would have been sell side liquidity getting taken. That would have been a target getting taken, and then at that point, I would have took off the sell limit order. I would have gotten rid of it, and then I would have just not taken the trade for the day. But because price respected this low here, I was comfortable taking a trade, even if it was like for half risk, right? I was comfortable taking the trade. So long story short, price goes in, taps me at the fair value gap. You can see that price respected it. Now, this is where things got extremely interesting, because um, price just consolidated for a long time. So, right, the entry activated at 10:42. So at this point, I'm tripped into trade. But as you can see, my rule that I would have is that I would move my stop loss to break even once price clears the first swing low, which in this case, right, this aggressive move down, this would be the swing low. So I would basically leave my position open until price gets to level. But as you can see, my final target is right here before the swing low. So effectively, the way this setup is, the way this trade setup is set up, that I basically am just taking it to the target, and I'm leaving my risk open, right? I'm leaving my stop loss where it is, because my stop loss is in a safe spot. I'm leaving my stop loss there, and I'm just taking it to final target, because once again, I'll move my stop loss to break even once price gets to this level down here, but it would hit my final target prior to getting there. So I basically just leave my position open and just leave it running. So the thing with me is I am an intraday trader, so I am not very fond of being in consolidation, which is what's been going on here, right? Price taps in, and then price is going up and then down and then up and then down. So this was literally going on for hours until, funny enough, when I went to walk my dog, I was in consolidation the entire time. And basically, when I went to walk my dog, it was like around this level here. And then as soon as I walk my dog, that's when price made a push down. And I set an alert because, I just wanted to make sure that I didn't want it to actively watch price. I wanted to make sure that price delivered to either, take profit or hit my stop loss, whatever. Then price came down and triggered an alert here. But the funny part is that um, my broker is a little bit different from TradingView. So price didn't actually hit take profit on my broker. So I checked my phone and I seen that I was in the position. So when price got to this level here, once again, my rule is to move my stop loss to break even after it gets to this level. But because price pretty much tapped it here on TradingView and didn't tap it on my broker, I just move my stop loss to break even at this point, because I would much rather like, guys, priority number one when it comes to trading. Priority number one, protect your account. Protect the balance that you have. You want to protect the balance. You want to protect your account. And the reason for that is because the more you protect your account, the more you can ensure you live another day for trading. And I've had instances where I got greedy and didn't roll my stop loss, and it led to me taking a loss. Now, I just did it because price pretty much hit my target. So I'm like, okay, um, I rather just protect my account this month because technically already have a win, but it didn't happen. So I just roll my stop loss just to be safe, to just to make sure I don't take a loss. And fortunately, price came down and eventually slapped my take profit. So I did walk away with a win, and I was super happy about it because it helped to eliminate greed. It's just I'm content with taking that. I'll take my win, I'll take my gains because I understand in due time, because I have a high win rate and I've been winning a lot. My my confidence is very high, and I understand that right now that for me it's just I'd rather just get the low hanging fruit, because if I already have a high win rate and I'm risking, a decent percent per trade, then it's in my best interest to just maximize my win rate, because compounding will take care of the rest, right? Over time, my account will continue growing. If I do the right thing over and over and over, I don't even need to like go for much, because I've seen scalpers who are able to just take small pieces each and every day and they can compound their account that way, right? And they only go for a couple pips, like they don't be catching like actual moves. And oftentimes it'll be negative risk rewards, but because they have a high win rate, because they're quickly going in and out of the marketplace scalping, they're able to grow their account. So I said, okay, let me just do that rather than me always trying to go for home runs every time. Let me just have a system that works. And clear as day, it led to me getting a win on this day, and I'm content with the results. Now, of course, um, in the future, I can adjust it, right? In the future, I could do it where like once it hits a 1.5 risk reward, that I can take off 90% of my position and leave a 10% runner to the final target. So then I can like have an intraday trade, but then also swing it if I need to a further target, and be able to take easy low hanging fruit, but also be able to swing and take like a long term trade, or have a runner, right? Essentially have a runner to then take a big win at the end. But I didn't do that. And once again, I traded a point zero 0.01. So like it's either I take the trade here or I take it down to the final target. But perfectly content with the win right here. And funny enough, if I continue to fast forward, right, as you can see, to I don't even need to, I'll just cancel right here. As you can see, the new day price made a massive gap. And where did it gap? It gapped past the low. If I go to like the 15-minute time frame, right? Yesterday's low price literally gapped under it. So if you had, your final target all the way down here, price would have actually hit it, which is funny. But I don't, there's no reason for me to be greedy or say, damn, if I had just, put my target down here, I could have taken all of it. You don't want to think that was a trader. You want to be content with what the market gives you. And if you're able to have a high win rate, say for example, 80, 90% win rate when you're trading, then you can do a one-to-one risk reward, and that will work wonders. Your account will grow so rapidly over time, right? Even with just a one-to-one risk reward. And there's many traders who have been successful with just trading a one-to-one or a one-to-two, right? In this case, I'm doing a one-to-five because I've noticed that a lot of one-to-twos, um, there's been plenty of instances where the one-to-two wasn't met. So I said, okay, what's the great middle ground? I'll do one-to-five, because worst case scenario, if I take a loss, then that'll be a one-to-one risk reward. And if I win, is a 1 to 1.5. So my wins will not only cover my loss, it'll cover my losses, and I'll still walk away with something. So this gives me a buffer in case I lose. And if there's instances where I take a loss and there's slippage, right, which is, that price aggressively pushes against your stop loss, and then you take a bigger loss than like you anticipated, this 1.5 risk reward also accounts for that, right? And I know with having this is low hanging fruit, a 1 to 1.5 risk reward. I know it's low hanging fruit because I've been trading this pair for a long time. So like I know this is very achievable. And then at this point, like this target is very capable of being hit often, consistently, and that will help maximize my win rate, and that will help allow my account to continue compounding. So I can literally make a career off of this. If I stick with it long enough, I can make a career off of this. It will just take some time, but that's okay, because as long as I continue making the right decision and continue heading in the right direction, it's inevitable for my account to continue compounding, continue growing, and then at that point, the rest is history, right? So This was more of a challenging day because like I know it seemed like the bias was pretty straightforward, but there were some instances where it was like a bit like ambiguous. Like I was sort of going like a little bit back and forth to determine like which direction this price actually want to go, before I ultimately settled on being bearish. And if you was bullish on the day, there wouldn't be a trade for you to take because um after 8:30, like no sell side liquidity was ever taken. Right, the 8:30 open, after 8:30, right? This is the 8:30 open candle. Price just went higher, right? Price kept going higher, 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 higher. So there was never any sell side liquidity got taken for you to take price bullish. So it was either you were taking a sell or you weren't taking a trade at all. In this case, right, I took the sell and it worked out right. And me not rolling my stop loss is what allowed me to win the trade, right? Because if I go back to 3 minute time frame, had I rolled my stop loss after this first tap and this push down, if I roll my stop loss over here, then I would have been taking out a break even, and then it would have prevented me from walking away with the win. So this is why you want to leave your trade open at least for the most part until the first low gets taken, because then this is the first sell side liquidity that gets taken, and then after this low gets taken, then there's no guarantee that price is gonna want to continue going lower because sell side liquidity was taken here. So that's why you want to take a partial after clearing the first low. But in this case, I didn't need to because my final target was prior to that. So when there's a fair value gap, price has a tendency to hover around the fair value gap, tap it a couple times before actually making the move. So you don't want to be worried or discouraged. Just allow price to unfold. But yeah, just me, the way I trade as an intraday trader, I like to be in and out within an hour. So I entered at 10:40 and then price took me out at 1:20. So this is about 2.5 hours being in this trade. But nonetheless, it still hit take profit. So I'm happy about that. And as we can see, at least right now with price and what it's doing, right? Price came up, cleared the high, which is, a sign of bearish. As you can see, price came up and wicked it. Like price didn't even want to go higher, right? Because if price wanted to go higher, you probably would have seen it close and continue trending higher to then clear this high and this high. But instead of doing that, price came up, cleared the high right here. It wicked it. It just came up, wicked it, and then aggressively pushed lower. So you see, price has been trending lower, and then now we have a massive gap, right? A big new day opening gap right here. And as you can see, price is going down lower, and of course cleared all these lows down here. So at least right now where things stand, I am of course bearish because the new week opening gap got blasted through. Price is gapping lower. We took a bearish setup and price is going down lower and lower, lower. So as of this very moment, I'm bearish. So that is the trade recap for today, right? Tuesday, April 15th is the trade I took that resulted in a win. This is my new rule or strategy moving forward where I'm just going to take a trade for a 1 to 1.5 risk reward because I know it's a very achievable target, and in due time my account is going to continue compounding and growing, and that's all you can ask for as a trader. For me, it's learning a skill set that can feed me for life and have the opportunity to be able to at some point allow me to take care of my family as well. And this skill set can do that with when you have the right information, the right knowledge, and you just do things the right way. You practice patience, you practice discipline, you just show up and bring your A game and bring out the best version of yourself so that you can keep winning. Because I'm telling you, the losses that I took probably this year in the past couple months. I want to say maybe like at least the last 2 months. I took 4 losses, and every single one of those losses was within my control, right? Each one of those losses had a component to it that made sense as far as why I lost. Either it was because of greed, either because it was FOMO, either because I got the bias wrong, right? These are all things that are in my control as a trader. And the wins that I got more wins than losses, but the wins that I got, I know why I won. But the wins that I got, it obviously led to me having a high win rate, but like the wins that I got were logical. They made sense why I won those trades. So, you know how powerful and confident I feel knowing that I've won more than I've lost, but that the losses were also silly losses and losses that I could have controlled, which means that these were all losses that could have been prevented, right? I look at that and think to myself, wow, like I have I'm able to grow and become an even sharper version of myself, being that better trader, then the sky's the limit. I can literally take this as far as I want. So I don't look at it as a matter of if, I look at it as when, right? Because it's inevitable for me to win. So I just got to keep at it, and I will. And in due time, I'll get a reward for it. So I feel like I'm at the point now where it's inevitable for my account to grow. It's inevitable for my account to compound. I just need to keep making the right decision, keep doing the right thing over and over and over. And implementing this new rule of having a 1 to 1.5 risk reward, it helps eliminate greed, and it'll just make my life easier because a lot of times I'll enter trade and then probably within an hour I'll be out because my final target's hit. And I'm not having to just sit behind the computer taking partials all day, being behind the computer 2 hours, 3 hours, trying to, you know, ride this entire move of price to clear this low and then this fair value gap, and then when price comes on and like I don't have to think about that, worry about that. I rather just go in, take a trade, take my piece of the pie, and then get out, and then I'll show up another time. So that is the trade recap breakdown for today, Tuesday, April 15th. Hope you found it to be helpful and beneficial. Sorry, excuse me. Hopefully you learned something, because here I'm literally showing you the model. I'm showing you the truth of how price moves, of how price communicates, of how it operates, and you don't see a single indicator. The only indicator you see is the sessions indicator, which are these color coded backgrounds. But all that does is that it just shows me the sessions. So the green just shows me London session, so I can see what happened in London session. And then this brown right here is, this is where I trade. This is the New York London crossover where its price is most volatile, and this is where I take my setups. Um, but I don't actually need this indicator. I just my eyes are already used to seeing it, so it's just helpful just to see what happened previously. But it's not needed. It's not required, right? I can trade without it. I can trade with naked chart. But this is the power in learning and understanding, because I want everyone who stumbled across this channel to get to this point where you can learn this information and you can become an independent trader, independently thinking trader, and make these decisions and take these trades on your own, right? Because greatness is, it's possible. These results is achievable, right? I want you to become an independently thinking trader, so you don't have to depend on anyone. You don't have to depend on signals. You don't need to depend on indicators. You don't need any of that stuff. You can just trade naked chart, naked price action, and this is more than enough. And this is true understanding, because this is logical. This makes sense. This is clear in my mind, right? And when you have a level of clarity, that's when, at that point, the sky's the limit, right? Because then you'll know why you're making decisions. And yeah, at the end of the day, this is a skill set. This is a skill set that can pay you for the rest of your life, and eventually be able to replace your occupation if you do everything right, right? And over time, can eventually replace your occupation, can eventually provide you with a full-time income, or give you more than you can ever ask for, and be able to take care of yourself and the people around you. And this is something you can teach to other people as well. So this is super powerful. So this was a trade setup and the pain take profit. I won on this day. Super happy about that. Now that's the breakdown, and now I'm just remaining focused and continue to show up for the rest of the week to see what the rest of the week has in store for us. So enjoy the video, do leave a like and subscribe, as I will be posting more breakdowns, of course, as we continue going with our trading journey. So once again, guys, this is Joel, and I'm out. I'll see you guys for the next video.